Hey everyone, it's Scott Groves with Neo Home Loans. Myself and Leah James just wanted to take a moment to send out a quick update about what's going on with rates because you're going to see all kinds of social media posts from a bunch of lenders who don't know what they're doing about rates dropped 0.5%, rates dropped 0.5%. Rates did not drop 0.5%. So let me give you the good, the bad, and the ugly. Okay, first of all, here's the good. Anytime there's good news out there about the housing market, about finances, about interest rates, this is a good thing. It is a overall net positive because consumers get off the fence, right? Just in anticipation of this rate cut. We've been hearing from a lot more potential buyers over the last 30 days, right? So anything that's good news, right, is good news. And so clients are coming out of the woodwork. They're wanting to get off the fence. They're wanting to freshen up their pre-approval. They're going to want to potentially buy a home before the end of the year. So please, realtors, reach out to all those people in the last 6 months who have been on the fence, because some of them are going to be super motivated to buy. And if you wait until you send out your Christmas cards or next year quarterly review or check in with them when you start to get a little bit slower, you're going to find out they went with a different realtor and are in the middle of closing a home when you reach back out. So please reach out to people about getting pre-approved. And if for some reason they need to get motivated about buying a home with you by getting pre-approved with us, just let us know. We'll do the full hopes and dreams call, and then our buyer consultation. We'll get them set up to buy. So that's the good news, because anytime there's consumer confidence with all the other negative media out there surrounding everything else, especially with the election coming up, it's just good to have good news. Now, the bad news. The Federal Reserve, despite all their desire to do such, does not control mortgage interest rates. The Federal Reserve controls the overnight lending rate, sometimes called the prime rate. And what that is, that's the interest rate that our credit cards, our student loans, our car loans, all of those adjustable moving target interest rates are based off of. So it's good, it's really good when they drop those rates, because then the burden of credit card payments and car payments and things like that gets lower, right? Which then allows our clients to be a little bit more comfortable buying a house. So that's good, but a 0.5% change on the prime rate, right, or the Federal Reserve funds rate, or the overnight lending rate, that does not directly impact mortgage rates. Now, there is a correlation, right? These things are correlated. It's not like a dollar for dollar change. These things are correlated. However, the Federal Reserve always signals months in advance of more or less what they're going to do. Sometimes they even leak the notes to the meeting like a week or two in advance. So the lower interest rates that we're seeing right now, right? There's some government loans, some really well-priced scenarios where you can finally get a rate with like a high 5 in front of it, 5.875, 5.999, something like that. Most rates are still in the 6s, but 9 months ago, those rates were teetering on the 8s, right? We were seeing some bad scenarios in some 8s and good scenarios in the high 7s. So it is good news. And one of my favorite sayings is that rates tend to trend, right? Rates tend to trend, meaning that if we're on a downward trajectory, that's normally the path that they stay on, and it's cyclical, right? Every 6, 12, 18, 24 months, these things are cyclical. So it feels like we're in a positive trending movement, even though no, you can't just automatically today get a 0.5% better rate on your mortgage. Things are getting better, and we're tending to trend in the right direction. So good news, kind of bad news. And then the last thing that I'll leave you with is this idea that I know it sounds trite. I know it sounds like some realtor sales pitch, but one of the things that we're explaining to our clients over and over and over again is this idea of like, don't wait to buy real estate, buy real estate and wait. Because last year, when everybody was saying that there's going to be this massive housing bubble and rates are going to continue to go up, and, you know, Trump's going to be president or Biden's going to be president or whatever, the economy is going to crash, the housing market's going to crash. As we know, it was all bullshit, right? So the people that stayed the course, they understood their financial plan, they got a real consult on their finances as we do. They knew, okay, this payment's higher than we'd like, but it's something we can afford. And guess what? In the last 12 months, the national average of appreciation for homes has been 6.6%. So if you bought an $800,000 house year and a half ago, you're up about $45,000 to $50,000 in equity. And now you can refinance at a rate about 1% lower than where it was last November, December. So you got the house, you got the tax savings, you're paying down the principal, you're making it your own, right? You got probably a better deal than you could today because of appreciation. You're up 40 or 50 grand in value, and now you can refinance and drop your payment $500-600. So if you've got anybody who we need to be talking to, let us know. Just know that the rate change that was coming was kind of already baked into the cake. We've already seen those rate adjustments. The next Federal Reserve meeting is November, and then they usually have one in January, although they haven't announced their 2025 calendar yet. So I would say now is a good time to call those buyers, be like, hey, rates are trending in the right direction. Talk to Scott. He can help you understand what you can afford. Talk to Leah. She can help you understand what you can afford. And we'll go from there and get some people into homes before the end of the year. Love you lots. Reach out if you need anything.